We're having another crisis in Europe in this new post-Brexit world. It seems like we're moving into new crises every second year in Europe, and this time around it's a brewing banking crisis in Italy, and it has actually been brewing since the start of the year when the new, what we call non-performing exposure rules from the European Banking Authority went into force of January the 1st. We already knew that Italian banks were not setting aside enough provisions and reserves for loan losses, and their classification on non-performing loans were very much different from other European countries. But the new set of rules are now have put in place one single framework across all European Union members, and as a result there is around a 60 billion euros capital hold in the Italian banking crisis, and Italian banking stocks across the board are down around 60 to 75% depending on which one you're looking at. And you can isolate and look at only one key measure to really see how bad things are, and it's called the Texas ratio. The Texas ratio is the non-performing loans and loans that have been delinquent for more than 70 days over the sum of their common equity and the reserves that set aside for loan losses. If you look at the top 10 among the 45 biggest banks in Europe, publicly listed banks, 7 out of those are Italian banks, and that's the reason why this is too big to fail. It's an uncontrollable crisis if it's not contained. You had Société Générale's chairman out the other day saying that we need to find a solution, and the issue is that we have had banking crises before in previous years, and out of that came the EU Bank Resolution Directive, which is pretty clear that you cannot do state aid directly capital injection into these European banks. However, there is an exemption to the rule, and it's called Article 32, which means that if a bank is very likely to fail at an upcoming stress test, you can do directly state capital injections. And the Bank of Monte Paschi in Italy is very likely to fail the next stress test, which is due July 29th. It have a Texas ratio of 140. Normally you say a Texas ratio of around 100%. It's very bad. So it's very likely to fail, and that's why there's rumors now that the Italian government will be allowed to do direct capital injections. But for the other banks, there is no room in the law for that. And as a result, this Italian banking crisis is slowly having spillover effects into other European banks. Deutsche Bank's 5-year CDS on unsecured debt rose to the highest levels ever, so higher levels than during the euro area crisis, and even a higher level than during the financial crisis. And it's really a testimony to that things are really getting sort of out of control. And we know the finance minister of Germany, Schäuble, is saying that policymakers in Germany are monitoring the situation very closely. We think that in the end they will have to bend the rules, because the bail-in mechanism that we saw with Banco Espirito Santo, which is following the EU Bank Resolution Directive, will be a catastrophic event in the Italian banking system, because there's 400 billion euros of non-performing loans. And if you have to do a bail-in where shareholders and creditors are taking the full loss in the Italian banking system, you will have a severe contraction in confidence among businesses and consumers, and we will probably move into a mild recession again in Europe. So we need to do a top-like operation that we saw in 2008 and 2009 in the US, where you set up two funds. The one fund is buying off bad loans from these banks and put it into a special purpose vehicle. The other fund is doing direct preferred stock injections into these banks with a high interest rate of around 10%, so taxpayers will at least get some money back, and then you recapitalize the whole system and you instill confidence again in the system. Another option that could be the ultimate last resort would be for the ECB to do direct capital injection into Italian banks under the mandate of price stability. And what I mean by that is that the current inflation trajectory is around 0% in Europe, and the ECB want to have inflation at 2%. If we were to see a blowout of the Italian banking crisis spilling into German, Spanish, French banks, and it went full blown, we would see massive deflationary pressures in Europe, and that would cause instability in consumer prices, and that would have the ECB to act within the mandate of price stability. So keep a close eyes on this Italian banking crisis. I think it's the solution to an upside surprise in European equities. You have to monitor the situation very closely. But if, and I say if, and I think also we will get a solution very soon, and when we get it, I think it will be a very interesting opportunities in financials in Europe, but also in European equities in general.